Oh boy, we got SoFi up in the pre-market, and pre-market is about to turn to actual market open because we're turning open here in about 10 seconds. SoFi up 10% after its earnings this morning. McDonald's also reported earnings this morning. We've got a lot to cover this week in the way of earnings. McDonald's only up about 1.38%. We got the bell right now, by the way. Ding, ding, ding. I'm your bell today. We've got what's interesting about SoFi. I want to go through some of these earnings here, and then we'll hit McDonald's and some of the others. As well as touching on the Fed. Boy, some numbers changing. Some of these graphs starting to look a little bit different, which is exciting. We'll talk about those. SoFi coming in at a $98 million adjusted EBITDA. They were looking at 65. That's like a 50% beat right there. Mental math, pretty good. We've also got a raise for 2023 guidance. Guidance expecting revenue to be somewhere around 2.06 billion versus the 2.03 previously expected. Now, SoFi's had a little bit of a rough last few months here since our July correction in the market. As you can see here, sorry, hold on. That is McDonald's, which looks somewhat similar. Let's go back over here to SoFi. There we go. You can see since about the beginning of August, we've kind of been straight down on SoFi. So this 10% boost will help hopefully a bit as long as it remains stable. Looks like we're right now sitting around 752. Next stop might be 792 based on the fibs, although sometimes those fibs don't behave the way they're supposed to. Anyway, SoFi, what's interesting about SoFi doing well here and increasing its revenue guide is it, on one hand, could mean they're seeing potentially more activity in lending and borrowing, basically people taking on more debt in these harder economic times. But it could also be a sign that there's more appetite for some of this risky debt. Think about personal unsecured credit as a risky form of debt, something you're more likely to default on than a house or a car, especially since it's harder to repossess things that you spend money on with personal debt. It's basically impossible. So that might mean you're seeing stronger buyer trends and a higher willingness to pay for existing debt that SoFi has. SoFi did announce that BlackRock is coming on as a personal loan securitizer. That's usually that's like a fancy way of saying what I just said, is that you're seeing more institutional money trying to chase higher yields. That makes personal loans like the loan SoFi does more valuable. So that's good. It raises the value of SoFi's book. And we'll get some more insight after their earnings call. These earnings just fresh out. You do have McDonald's just now turning negative, by the way. McDonald's here started green, and this has been sort of McDonald's ride in the sort of anti-staples and, if anything, potentially everything collapse that we've seen over the last 3 months in the stock market. You've got McDonald's coming in with an adjusted EPS beat, 319 versus 298. Comp sales up 8.8% over the last year. Not bad. You've got macro headwinds expected to continue in Q4. I think that's what you're finding is a lot of these companies are sort of refusing to adjust their pricing down. As a result, they're willing to take more of a hit on volumes. As a result, or sort of in defense of that, they just blame the economy. Well, the reality is they should consider dropping their prices and getting into deflation. Eventually, we'll find that, but it's just it can't come soon enough. U.S. traffic declined in Q3. That's really what's leading McDonald's, not to do so great after this beat on earnings. I mean, you get some fluctuation here on the stock. You do also have restaurants deemed to be fully staffed with lower turnover at McDonald's. It's really just a way of saying, hey, look, we're staffed, we're ready to support people and provide value, but we're charging too much money and people aren't coming as much either because they don't have as much money to spend. Their willingness to spend is lower, whatever it is. Starting to see more borrowing at SoFi lead to SoFi stock up and more appetite for those loans and less people spending money at Mickey D's. At the same time, this is the chart I really wanted to talk about with the Federal Reserve. You've got the Fed funds rate. That's a mouthful. The Federal Reserve's Fed funds rate, their terminal rate, now dropping. We have not seen this level that we've just dropped to since about August 10th. Hey, that's Lauren's birthday. And this is the first time we've seen this low on the Fed terminal rate expectations. Take a look at this. 5.38. Remember, 5.375 means zero additional interest rate hikes from the Fed's FOMC. Now, when we look at the actual monitor to see what's going on with Fed hikes, what's going on with the Federal Reserve in terms of expectations, we are at a 99.7% chance of a pause or no rate hike from the Federal Reserve on November 1st, which happens to be the same date that we have right here for the closing of the 2023 HouseHack fundraise. Make sure you go to househack.com to learn more about that. But anyway, 99.7% chance no rate hike, followed by a 24.9% chance of a rate hike in December. That would be December 13th. A lot of this probably coming down to the jobs report, which guess what we have this week as well? We have labor. We have jobs expectations for 180,000 jobs to be created. That's still not actually below trend. So expectation is that job and hiring will be at trend. We've been going through, and I think we've got about we've got probably a good 4 to 5 pretty strong applicants right now that we're working with on our computer software engineering jobs for our startups. You could email us at jobs@househack.com if you get a resume in computer engineering looking for full stack. But anyway, it's really interesting because we're hiring and we're growing. We're looking to grow because the way we see it as a small biz is now's the time to lay strong foundations. Even if it means a hard year or 2 more years to go, we come out strong that way by investing now. Whereas a lot of businesses usually in these harder times, whether by choice or force, kind of turn inward and you stop investing, you stop spending. Downside of that is it makes it a lot harder to, really take off and launch in good times again. Looking at the rest of the market, you could see here Bitcoin at 34.6. It's actually a nice recovery. I saw it get down to about 33 this weekend. This is the 1-minute chart. Zoom out here to the hour chart, a little easier on BTC. Yeah, you can see you were down at 33 here, 33.3 for a moment there, upper 33 range. Really a nice little channel you're trying to create here as you're getting back to that resistance of 35.9. McDonald's now up 80 bips. You've got Enphase. Boy, what a disaster. Look at that disaster through the fibs here. I mean, this is like one of the most shortable downtrends I've ever seen, and it has been the downtrend too short for sure. Here you go, Tesla sitting at 209. Some of these prices we haven't seen in a long time. Zoom out to the week chart on Tesla. I got to get rid of some of this stuff I wrote down during the earnings call. But anyway, there we go. Look at that level where we sit. These are levels that we saw in May of 22. These are levels that we saw in March of 21. December of 2020. Stock hasn't actually moved much in nearly 3 years. Next up, in terms of eco expectations, tomorrow's Halloween. We'll be getting conference board expectations, Dallas Fed services activity, followed by on Wednesday, which is November 1st, we'll get mortgage applications. We'll get the ADP report, 150K expected. We'll get JOLTS. That'll be a big one. 9.3 million jobs expected, down from 9.6. Remember, though, last time we were at 8.8 million job openings expected, and that was what the prior was as well, right around 8.8, 8.9. And we actually popped all the way up to 9.6. Pretty strong economy. This is a tough economy for the Fed to kill here, but boy, they ain't giving up. Looking for a Fed pause, though, that same day on Wednesday, November 1st. We'll be covering that in detail. Following that, we'll have the labor change in non-farm payrolls, looking at 180,000 for the jobs report on Friday. Unemployment rate to stay matched at 3.8%. That'll give the Fed some more power to stay strong, higher for longer. Average hourly earnings actually expected to come in at 0.3%. 0.3, that's higher than the 0.2% we had in the prior report. What we'd want there is a softer wage pressure report in terms of wage gains. Look, we want people to make more money, but we don't want to signal a wage price spiral because ultimately that'll be worse for everyone. Worth noting that actual household net worths are up according to the Times. So some people are going to question the source, but according to the Times, household net worths are up 34% since 2019. Inflation making up roughly half of that at about 18%. Going forward, we have earnings coming ahead. Not only did we have McDonald's today, Western Digital splitting into two. You've got GM striking a deal finally. You had SoFi earnings this morning, which we talked about. Tomorrow, you're going to have AMD, Amgen, Caterpillar, BP, Pfizer. So some of the big ones that'll be reporting tomorrow, followed by Wednesday the 1st. That'll be another big day. Qualcomm, Mondelez, CVS, Airbnb. You'll have PayPal also reporting. A lot of people looking at PayPal as a potential value stock. We'll be looking at Kraft Heinz to see what kind of inflationary pressures we're going to keep seeing in foods. And then, of course, November 2nd, you get Apple, Eli Lilly, Novo Nordisk. Let's hear about these Wegovy and Ozempic weight loss drugs. Starbucks. Is Starbucks going to see less muffins getting purchased because of the weight loss drugs? I don't know. People get mad when that gets said, but the reality is less calories eaten means somebody's got to pay the price for less calories being consumed. Although it's probably healthier for you. But then again, we've seen these weight loss drug crazes in the past, you never really know the side effects, unfortunately, until years in. So it's always something to kind of scratch your head with and go, oh. But then again, I look at stocks and news. I'm not a doctor. Anyway, the Bloomberg bunch today is complaining that the Federal Reserve's fight against inflation is affecting the middle class the most. They say despite roaring growth and a resilient job market, more middle-class Americans are worried about the state of the economy than a year ago. A year ago today, 40% of Americans were worried about the economy. That's despite the fact that stocks were way lower a year ago and had another bad 2 months ahead of it. And now, ignore the stock market for a moment because the stock market's not the entire world, right? What do you have? 44% of Americans increasingly stressed about the economy this year. Level of stress increasing at the same time as American spending on interest and debt increasing and purchasing power falling. Guess which age group is most affected by rising prices? Think about that for a moment. Is it Gen Z? Is it millennials? Is it Gen X? Or are it the boomers? Which age group is most stressed about rising prices? Think about that for a moment while I take a sip of coffee. Survey says Gen X, 51%. That is twice as likely as Gen Z to give a hoot about rising prices, which is really interesting because if you look at American Express, they are bragging about how Gen Z and millennials can't get enough new American Express cards, baby. Spend, baby, spend. Gen X is like, whoa, 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 we remember. Oh, wait. Oh, no. And Boomers like, we've seen this before in the 70s. We know it's coming. Have you seen the inverted yield curve? Speaking of the inverted yield curve, let's take a look at the inverted yield curve. Inverted yield curve is inverted by 16.8 basis points at the moment. Not too inverted anymore. Unfortunately, the steepening is the painful part. And the steepening really started around July 19th, which is funny because that was kind of the top of the stock market near term here. Oil prices coming down as despite the craziness that's going on in the Middle East, things appear to be at least somewhat relaxing. Not great, though, in terms of what's going on in Israel. If you have not yet seen, I made a complete breakdown on everything that's going on in Israel, Trump, China, Russia. Watch that video. I posted it this morning around 5:20. Very, very important update. Catches you up to speed with everything that's going on or has gone on over the weekend and Friday. And gets it all done for you in about 14 minutes, which I think is a bargain. Listen to it on 2x, 7 minutes. You'll be caught up. Some really incredible statistics in that as well. So watch that. You've got gold over $2,000, but dropping back from its highs from over the weekend and Friday. 10-year Treasury up 5 basis points, still sitting at 4.9, really taking a hammer to real estate. 2-year Treasury also up 5 basis points at 5.06. Barron's on their cover this weekend. I meant to put it in here, but I didn't. Barron's cover this weekend told us what? They told us buy bonds. Literally the front page of the Barron's magazine that came thrown at my door this weekend says buy bonds. It's their opinion. Buying bonds makes sense, potentially, if you're looking for a risk-free way to lock in 5% yields for 2 to 10 years. It's insane. Problem is, if you need to liquidate those before the expiration, before maturity, you're subject to market risk. But that could be a good thing, because if yields fall, bond prices could rise. The downside risk, though, is that yields rise, bond prices fall more, and then you realize you need the money. And then you go, oh, crap. So not everything is actually riskless. But of course, that depends on your own personal circumstances. Taking a look at the indices, NASDAQ, which has really suffered a correction here. I mean, we're down, a good chunk here. We're down at 349 right now. Let's look at the fibs. 349, nice little downtrend we've set off after coming down from about 387 at a high. 387 now sitting at 349. These are the Qs. You're at about 10%. You are looking at riding right now on this fib retracement line. We've got about 348, 349 right here. Didn't make it to that all-time high of the winter of 2021. Though inflation adjusted, this number should theoretically be much higher to actually match that high at about 18% to this number on the Qs, which means 406. Actually, inflation adjusted looks closer to 479. 479 means right now at 349 divided by 479 means the stock market is about inflation adjusted 27% off its all-time highs. Which actually, if you think about all the craziness that's going on, ain't that bad. The nice thing is we're well off some of the lows we've seen over here. That is in the winter of last year, unless, of course, you look at Enphase, but then you don't have to just look at that stock because you could also look at Tesla and go, oh, damn. But anyway, things will get better eventually, right? Who knows? Damn it, Jim, as Moon here says. Yeah, no kidding. Anyway, congrats on the newborns. Thank you so much. I will have a baby video coming out today, so stay tuned for the baby video, and you get to see the little twin girls, beautiful, gorgeous little girls. So cute. Baby's so cute. It's crazy. It's like now I got a 5-year-old and 8-year-old out there. And, it's like they're not babies anymore at all. Anyway, Federal Reserve is going to be a big deal this week. It is Fed week, but not only is it Fed week, it is the week to invest into HouseHack. HouseHack fundraise closes November 1st, 2023. If you have questions, email us at ir@househack.com. That gives you a quick morning market update. Follow along as we see what happens with McDonald's. SoFi already fading some of these gains, now only up about 8% as it's basically fading its gains right away at the open there. So pay attention to how SoFi moves today. Watch McDonald's for what kind of talk they talk about inflation. Don't be misled. Don't let them tell you prices are up just because they're comparing to 2022. You want to see what kind of new price increases we're actually talking about at McDonald's. I don't actually expect them to be very, very high. Waiting for the earnings call to finish. I'll be going through that with course members and our course member live stream soon. And as usual, keep in mind that even though I'm a licensed financial advisor, licensed real estate broker, becoming stock broker, this video is neither personalized financial advice nor real estate advice, not tax, legal, or otherwise personalized advice. Generalized perspective and information and commentary. Thanks so much. None of this should be deemed reasonably sufficient information either for the purpose of evaluating a security. Thanks so much for watching. We'll be back. Let me know if you like the opens, and maybe we'll bring more of them back. Thanks so much, and we'll see you soon. Bye.